The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to have a little moment of prayer today, folks. We've got a very, very dear friend over across the pond who is taking care of his lovely wife, and they are in the last stages of hospice, and she is very, very ill. So send out some white light for Angie. She's a real sweetheart. Anyway, I wish them the best. They're really wonderful people. We've been over to visit them, and they've been here to visit us, and quite a young lady. But anyway, let's move on here, talk about the markets a little bit. Just a second here. We've got a special thing happening right now. We've got something from Shane Smolian, the old wolf trader, is on the on the other line for Skype. He's not on live line, but he's going to send a chart. I know he's listening to the show, so if he'll please send it, he would like to send it on to the folks. So as soon as he gets it to me into Skype, I will copy it and paste it into the room. We've got a lot of things happening. Here it comes. Just give me a second here, and we'll just do it right now. And let's just get this up so that everybody can see it, hopefully. And then I'll be able to be okay. Wow, this is going to be fun. Let's just get this up here so we can see it. Okay, well, it looks like we're over a really interesting spot here with the old planetary speed index. Let's get this up here. I wish Shane would come on and describe what was going on here, but if you can see, it has to be related to the speed of Mercury, which was done, by George Baer, and it's very, very good stuff. So he believes that we're at an important low in the market, and then another major low somewhere down around the 1115 area. So the way the market's acting, it certainly came out of here very, very strong after the slight sell-off yesterday. So we'll have to wait and see. As you can see from the German DAX, we've had a little bit of a rally off of the ABCD. If you can see the move that we're having in the FTSE, it's been a lot less. We made a beautiful 61% retracement, and we haven't gone anywhere for 6 days. That is usually not a very good sign, but remember, we're in the time of Brexit, so that's going to be important to pay attention. Now, we want to follow through with our little work that we've done with Apple. I wanted to bring this to your attention yesterday because we were setting at major support. Oh, dear. Okay, 1 second here. We'll set here, get this major support that we're looking at here in the in Apple. And what I'd like for you to notice here is we were looking for the market to rally because it had pulled back to a perfect 61% retracement at that point. However, what happened from that point was the fact that, let me just show you what happened just to update you from the action yesterday, because this is a really important principle for those of you that like to trade stocks. You'll notice that the Apple gapped lower in the morning, and it was below the opening price. Folks, if you're trading stocks, it doesn't work as much with futures anymore because they're open 24 hours a day, but the stocks, if you'll watch how they open at 9:30 in the morning and watch that opening price, you're going to be really surprised how the prices meander around that. This work was done originally by Jim Sibbett and Earl Haddady back in California in the mid-'60s. That's when I met them. They were a neighbor of one of my mentors, Dave Nelson, who taught me about soybeans, and it really worked very well. And then when I was in Chicago, I would spend weekends down in Hendersonville, North Carolina with John Hill and his family, and John's son, John Jr., was at Duke University majoring in computer science differences. And so we got the data from the stock exchange on the opening prices. We also got it for commodities, and that led to Toby Crable writing his book, The Opening Price Principle, because Toby and John Jr. went together to start the fund. John Jr. is on his own, and I'm pretty sure Toby Crable is too. But you'll notice here, after the market broke really badly below the 61% retracement, you can see that it went right through the 78, and that took it all the way down to the big ABCD pattern from September 4th down into the September 11th, then up to September 13th, and then last night's overnight low was just at 215, as I recall, and now we're having a little bit of a rally in this. So that's it. Dave Nelson was he had a newsletter called Timing Research, Market Research. It was called Market Research. He lived in Pasadena, California. He was a really avid trader, and he traded soybeans, and his very good friend was Oscar McClure. And these guys, when they came into the office, they were dressed in, vests and suits and everything. They were really professional traders, but they had been trading soybeans their whole lives, and that's all they focused on was beans, meal, and oil, and that was the one that really got me out of my quandary, back in late 1975. But they were good friends with Earl and Jim Sibbett, Earl Hannity and Jim Sibbett, and that's how it all happened. I don't even know if you can even find the old original pamphlet that Earl Hannity and Jim Sibbett wrote about the opening price, but that led, to John and I doing the work, and then Toby Crable's got a book out there that sells on Amazon for like some ungodly price at $1,200, and it's basically, watch the opening price. If you're lower than the opening price and you're long, you got a very, very poor chance of winning for the day. And if you're short and you're above the opening price, you got a very, very poor chance of losing. So of winning. So anyway, that's what it's about. I wrote a little book about it called The Opening Price Principle, covering that stuff. It was done in 95 or 96, and the problem was, the next year they started the old So's Bandits came in, and then they started doing overnight trading and all the other things that were going on. Folks, one of the advantages of being here at TFNN is we've got a pretty good audience. And let me get this up here, because we had several people sent me this. This is about the lightning strikes. This really surprised me, because I was always told that Tucson was one of the big lightning strike states, and as you can see, it's not even close. It's like only gets 17 per capita, whatever, 17 fatalities. But you'll look at Florida is by far way ahead, 126, and so this is, I stand corrected, but thank you very much. I appreciate that, because, when I say these things, I'm saying them from memory. But remember, my memory only goes back 36 years. I have a 36-year memory, so I can remember that. Why it is so small, I have no idea. That's how it was sent to me, and I really don't know anything that's going on. But anybody that can remember where they were and what they were doing 36 years ago, please call me. I'd like to know what you have for breakfast, because I can't remember what I had for breakfast on Sunday, let alone today. Give me a break. All right, let's move on here to a couple other charts that we need to cover. Watch these bonds, folks. Very, very important. Watch these bonds.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN has just launched a Tiger Dollar sale for one weekend only. Through Tuesday, September 18th, you can get up to a 50% bonus on your Tiger Dollar purchase. Tiger Dollars never expire and can be used for any TFNN newsletter or service. TFNN has a new website launching in the coming weeks, and to celebrate, we're having a Tiger Dollar sale. For all the details and to get up to a 50% bonus on your Tiger Dollar purchase today, visit the front page of TFNN.com before this sale ends Tuesday.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I'm going to just give you a quick rerun of some of the things that we do here on research. This is the foreign exchange market for the euro. It's 2-hour charts. Each bar is 2 hours. And what I've done here is I've marked off the opening price for the markets that we're looking at. The London Open for Forex trading is roughly 1 a.m. Eastern Daylight Time. And what we try to do is to see how the market reacts around that first hour's trading. Because if it moves above that area or below it, it gives you a pretty good idea of what's happening. Take a look at this chart, folks. You can see that it does have a pretty good heads up of what's going on in some of the markets. So if you want to do some research, this is one of the things you might want to try to do because it has some very good ramifications for the foreign exchange markets. But you must use the London Forex because that's the key to the Forex markets, in my opinion, is London. And that's one of the things that you probably want to, pay attention to as you go through some of these charts that you're looking at during the day. Now, we're going to have Tim Bost as our guest today and from Financial Cycles, and so we're going to be able to have him on in just a little bit. He's going to talk to us about some of the things, but let's take a quick look at this chart here on the Treasury bonds. I want to bring it to your attention again. There is not anybody on this planet that is more bearish than Treasury bonds than I am, but not right here. And the reason why is if you will take the time to look at the high between July and August and measure that and compare it to where it was between August and September, you'll notice that the time down is nearly perfect, and you also have an A, B, C, D pattern coming in here somewhere around this 141.10 area. So we did take out yesterday's low by just a heartbeat. It hasn't gone too much lower than that as of yet, but it certainly could. But I believe we'll probably get some type of a rally here before we go lower. Now, there was one other market that we were watching for today that we said we were going to talk about, and that is the coffee. We have to take a look at the cup of joe today because we are knocking on heaven's door, as they say in technical analysis of financial markets. And you'll notice that we have a 3 drive to a bottom pattern at the 97.20 level. I believe we're trading around 97.40 right now in the latte. And this is a pattern that if you take a look at it on a shorter term time frame, like blow that chart up and blow it into a daily chart, you're going to see a 3 drive to a bottom pattern coming in absolutely perfectly. Now, do 3 drive to a bottom patterns work all the time? No, boys and girls, they don't work. But when they do work, as they say in the trade, they work extremely well. Let's just look at one in review that looks exactly like that coffee chart, and you're going to see what it is. It's the little piggies, Christmas hogs down there at 44. And now they're trading at 57. That's a big move. The amount of risk here is very, very small. So keep an eye on it. I'm not making a recommendation. I'm just bringing it to your attention. So keep an eye on it. Haven't traded coffee in a long time. Don't intend to. So we will see how it ends up in the next few days just to see if the patterns worked or not. We have some action going here in the gold. It keeps wanting to move a little higher. The silver keeps stopping right at 61% retracements and rallying. This market's beginning to look more and more bullish. Any move above this 1220 level in the gold, I think, is going to put it into high gear. We're starting to see positive signs in the open interest, which is good. So that's another thing that makes it look very, very interesting. We also have the grains in the new low ground, and most of them, not with the exception of wheat. That's been acting quite nicely. But we're very, very close, folks, to that soybean number that we were looking at last week. If you'll remember, we'll just take a quick look at it again because this is where we were as of Friday, and I want you to look just a tiny bit lower than that, and you're going to see that the 1.618 expansion comes in around 27.15. We've been down to 27.40 this morning, so we're only about $100 or so away, but I would be looking to buy Christmas soybean oil at 27.15. That's a 1.618 expansion, and also another 3 drive to a bottom pattern that might be looking at something pretty good. So let's just, keep an eye on how it's going. Anyway, we'll see. Folks, about the coffee, I'm just looking at patterns. Mr. Z brought this to my attention a couple weeks ago coming down to this area, and it's there. I mean, whether it's going to work or not, I don't know, but it's just a pattern. And like we mentioned before, sometimes they work, sometimes they don't. That's the key to what you're looking at. So let's keep on moving here to some of the other things. We talked about cattle yesterday. Now, cattle have come up, and they have completed the pattern that we were waiting for. We'll just get this up here because you'll be able to see it. Just a second here. We'll get this live cattle up. And we've been up here now for 2 days now, up at this 118 area, and that's where we are. I won't forget the wheat. Believe me, I certainly won't. If you'll give me a second here, I'll do my best to get the wheat up because it is one of our favorites. Cy and I and Rich happen to be long the wheat in here because of the fact that we had that really nice move down to the support level, which was 496. That was a 78% retracement of the contract low way back in January. We're now trading at around 514, and whether that's going to continue up or not. But that has the most bullish of any of the fundamentals. But with the and they shouldn't be affected by tariff too much. And in fact, the president, the grains and this other stuff is not good. Folks, you got 1.5 billion Chinese that eat every day, so they're not going to stop eating. So, you know, if anything, it's going to affect, you know, plastic goods and electronics and televisions and things like that. But they're not going to stop eating. And, you know, the only place they can come to get this stuff right now, because, you know, we're not in the growing season down in South America, is going to be here. And our crop's going to be coming in now. So, and it's going to be a big one, but I believe it'll be taken care of. We're very, very close to long-term expansion numbers in the soybeans, the November beans. Watch November beans if they break $8 down to $7.99. It's hard to believe they were $10.60 on Memorial Day weekend when the weather was so high. And what happened? The weather got a little bit cooler with a little wet, and bada bing, bada boom, they're down $2.50. So they're not only are they under tariffs, but they're giving them away. The price is 20% less than they were 2 months ago. So those are other things that you have to factor in, that they're getting down to a level where they have really good value, at least on an international basis. That's the way it looks like as we watch here. So keep an eye on some of these things, folks. We have some pretty good moves here happening, and where we continue, there are probably going to be some even in greater ones. Another one you really need to watch is the crude oil market, because you know, we're right up around this $70 a barrel. We hit $69.99 just a little while ago, and that number is a beautiful 61% retracement on the daily charts. And of course, we close above that strongly, you're going to be looking at a market that's probably going to take it up a little bit higher. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Tim Bost out of Sarasota, Florida, Financial Cycles Weekly. Tim, how are you today, my friend?
I'm doing great, Larry. How about you?
Pretty good. Has the red tide left your area?
Well, it has dissipated somewhat, but I have not been to the beach, so I'm going to hold off on that one anyway.
Yeah.
We
Folks,
had quite a virulent outbreak of that. I'm sorry you had to visit during that time.
Well, it's a beautiful place, but the red tide, folks, is some type of an algae that occurs occasionally and really dissipates the area really badly for
I think we have the golf
tourists
courses to blame for it, actually. They use the fertilizer and it washes out into that and it feeds the algae instead, but that's another story.
Oh, dear. Listen, why don't you tell us what you're looking at here on that first chart that we have up?
Yeah, what we've got here is a Gann wheel. We do a lot of work reviewing the work of W.D. Gann, who pioneered a lot of the astro trading techniques during the first half of the 20th century. And this is his master time and price chart. And he liked to graph things out in terms of price correlations with time intervals. And one of the key things that Gann looked at was the beginnings of the seasons of the year. From an astro standpoint, we call those the cardinal ingresses, when the sun moves into the various signs of the zodiac that mark the beginning of the seasons. So here in the northern hemisphere, we get the beginning of spring when the sun moves into Aries, the beginning of summer when the sun moves into Capricorn, the beginning or Cancer rather, the beginning of winter when the sun moves into Capricorn, and the beginning of fall when the sun moves into Libra. And that fall equinox, which is actually the beginning of spring in the southern hemisphere. So for our friends down under, we do want to acknowledge that, but we'll call it the fall equinox for convenience here, is coming up this weekend on the 22nd of September. And so that's a very, very powerful point. Gann talked a lot about that being a critical part of the year, and the beginning of trends will run for about 180 days until the next increment, and can often signal a pullback in the markets. What's going on with this, Larry, is that we're not only getting the equinox coming up here at the end of this week, but the day prior to that, we have an unusual alignment with the planet Uranus in an opposition to the trans-Neptunian factor Apollon. And what this can do is create a big blip in the market activity, not always associated with a downturn, but typically market surprises are characteristic of these particular dynamics. And then right after that, as we resume trading next Monday, we've got a full moon on top of it. So we're flagging this as a particularly potent period in which we can see some potential corrective activity going on.
Wow. Tim, you mentioned the equinox, and I remember, 25 years ago, I went down to Chichen Itza down in the Cancun Peninsula of Mexico to see the big pyramids. And on the 22nd of September, as the sun hits directly above the pyramid, it starts making 45-degree angles to the rocks on the pyramid, and you can see it like a snake going right down into the jungle. It's just so cool. Perfect. It's so perfect that it's just, you can probably catch it on YouTube, but to go down there, I think there were about 200,000 people going there to look at that, but it was really amazing to see the accuracy of those people that built that pyramid, the fact that it's only on that day of the year that it does that, but it's really quite cool. Tim, the next one you're taking a look at here is the S&P that
Right.
we're looking at here. And what is this? This is related to this equinox. What is it you're looking at here?
Yeah, essentially, with this chart, the critical piece there is at the bottom, that scale. The zero mark marks the exact date of the equinox. And what we've done here is go back to 1950-51 and back test all of the previous years of the S&P and see how this index has behaved around the time of the fall equinox. So what we have are calendar days, not trading days, and the scale at the bottom shows minus 40 days before, 40 days after. And what we can see here is that there tends to be some consolidation, a downturn that gets underway around the time of the equinox, and then it culminates about 7-8 days after that. And we're looking for a trading bottom here to kick in around the 27th, 28th of September, based on this back testing with the S&P. Of course, the old caveats about past performance not guaranteeing future results certainly apply even with all of our back testing. But we at least take a look at this and say, hey, there's definitely a historical precedent for this. And although the S&P doesn't turn on the exact date, it obviously sets up a recognizable pattern, and we like pattern recognition, obviously.
Well, so do we. You've got the one for the Hang Seng Index that's really interesting, because we're seeing a beautiful 3-drive pattern in the Hang Seng Index. So this looks like it could have a pretty good rally here for the rest of the month.
Absolutely. And in this case, with that Hang Seng, again, the same measurement applies, and we're seeing right on the equinox as a pivot point for this. It's kind of a little teeny double bottom there, but the equinox, remember, occurs on Saturday, so probably at the beginning of next week, we'd be looking for a potential entry point to the long side on the Hang Seng.
That's good. And the next one we're going to take a look at, of course, is the gold market, and everybody at TFNN always follows gold. And we're seeing similar to that type of a move also.
Well, exactly. Except, the thing with gold is that the pattern is a good bit choppier, and we basically have a gradual uptrend in place. But with the date of the equinox, we hit a peak a few days prior to that. So right about now, we would expect to pull back into really the first few days of October. Looks like about the 3rd or 4th of October, we would expect to see that next bottom, trading bottom hitting with gold, and then some movement back up after that. Gold is pretty hard to call, and we'd like to see more clear-cut patterns. I did want to include that with this because of the interest in the yellow metal, but also because it illustrates the fact that when we look at these astro phenomena, we're looking at things that have a high degree of reliability, but they don't affect all markets in exactly the same way. And that's an important thing, I think, to understand with astro trading, is that it is almost always a special case scenario. And a lot of traders who get involved with the astro techniques discover something that works and then try to apply it willy-nilly to other markets, and it doesn't always match. So be clear about doing the back testing with the market that you're trading, I guess, is the message there.
That's absolutely for sure. Now, Tim, we've got to show you the last chart that we have for you, which is the chart on the Bitcoin. And what do you wrote a book about Bitcoin. You want to tell the folks a little bit about that and what you're seeing here?
Yeah, what we did was put together an anthology of articles by some of the leading analysts in the astro trading sector, including Bill Meridian, who's a good friend and a frequent guest of yours as well, contributed a piece for that. And we basically were trying to research what the correlations with Bitcoin and some of the astrodynamics are. And in this case, we're definitely bullish a little longer term on Bitcoin, although as you look at this chart, it looks like a basing effort is underway right now that should continue for about the next 2 weeks.
Hey, Tim, I want to thank you for joining us, my friend. We'll have you on again soon.
Thank you, Larry.
Thank you, Tim. Tim Bost, Financial Cycles Weekly.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, let's take a look here at this crude oil. As you can see here, we are back up around that $70 a barrel level. We just cleared it. That's right at that 61% retracement of the previous high. So you can see the importance of this number here. As we close above this 70 level, it's going to be pretty good. Well, let's get the new chart up. That should be no problem at all. There we go. Sorry about that. In other words, we're right up at that 70 level now. We went right down to the 78% level, 61% retracement here on the 4th of September. Then we had a really strong rally. We pulled back down yesterday to just below 68, and now we've rallied $2, a little above $2 a barrel here, and we're getting close to that, well, in fact, we've hit that 61% retracement at 70.05. Now we're going to be watching it, very closely here because this is still in a short-term downtrend, but any move closing above that 70.50 level in crude oil would be a very, very important thing, to look at. We've had another question to get back to the soybean market, folks. I posted that November soybean chart right before Tim Bost came on, and basically what we were looking at were the expansion numbers on the downside here. We're not seeing that in wheat because wheat has already started to move to the upside, but we're very, very close in the soybean oil for a 3 drive to a bottom pattern. And also in the soybeans for the November, there would be an expansion down there. The problem is you could get all the way down to another 20 cents lower down to the $7.99 to $8 a bushel, and with the Chinese out there getting ready to fight back with the tariffs, if they are in fact going to fight back. And I'm not even sure this stuff means anything, because the stock market certainly doesn't care about it. And so that's usually a way of looking at some of these things. So remember that it's the news follows the trend. So probably when this thing comes out, it might be a acknowledgement, yeah, these tariffs are okay, and we're going to be getting them fixed, and everything's going to be all right, because that's what the market's been telling us. That's what we're watching, right here. So we had a little bit of a sell-off yesterday, 150 Dow points, and the Dow's, taking it all back. So it's telling you that this market is certainly, acting like it wants to go higher. It doesn't appear that that Dow Jones is only about 50 points away from a new high. Now we're far, far away from that on the NASDAQ, because it looks still looks pretty bearish, but that's neither here nor there, because it's multiple markets that we're looking at here. So we need to watch it, because there's a possibility that if these tariffs don't really mean anything, there might be a whole new leg up on this stock market, and who knows where it could go. We're seeing really good bottoms in the Chinese market, and also in the emerging markets. We focused on that on Monday to show you that those were some of the things that we're sort of keeping an eye on, and that looks like they certainly are. Look at this Hang Seng, folks, on a just on a longer term chart. Look at the weekly chart here on the look here. Look at this on the weekly chart. We had a 61% retracement, and not only that, but we had a big rally, and then we came down and we tested it last night. The Hang Seng was down 1 3/4 points and ended up being up a point. So it did like at a 400-point swing, and that was one of the reasons why the market was so strong in the U.S. because the Asian markets had literally turned around, and we had some really a three-drive pattern in the emerging markets that we talked about last week and posted charts on it. The same thing with the Shanghai, made a retracement level that was very important. So this is an important low possibly, and this is what Shane Smolian was telling us this morning when he sent out the chart. So we'll see if that's going to be the case. But looks to me like these tariffs are not going to be a big deal. At least so far they're not. They start out, they drop for about an hour, and then boom, they're back to where they were. So that's neither here nor there. Someone's asked a question about what would be the area to be watching, to see where Apple should rally to. And if we just take a quick look at this and just did a very, very quick assessment of the 61% retracement of the high from the 13th to the low yesterday, that will take us up to around 220, 223 is where the rally should stop if it's following the same pattern that it's been following. Because and right now we're above the opening price, so that gives it a positive bias also. So those are some of the things that we want to be watching as we look at some of these things as they're going through. Now the Treasury bonds have now broken down below those old lows, so maybe they're going to not stop here, but we're at some major ABCD spots here on some of these things, so we have to pay close attention to it. I think we're just making new highs now in the Dow Jones Industrial Average. We're above the 61% retracement, of course, in the December E-mini S&P that came in at 2904. We're trading at 2905.75, and so the Russell is lagging very badly, but that's been lagging badly from the very beginning. And if we look at this, you can see here, let's just I don't have the updated chart for the Russell. Doggone it, I thought I did, but I didn't, so we'll have to wait and see. But we will look at the composite here in the NASDAQ. That still has not taken out, it has not even taken that out yet, so we'll see if that is going to be the case from that level. The natural gas has started to move a little bit. That's mainly because of all the problems they're having through South Carolina, North Carolina, and into Georgia too, because of the fact that there's so much flooding, and a lot of these folks live on, out in the country where they need propane and stuff like that, so it's going to be looking at it. Terry's telling us that there's a three-drive pattern on the IWM, which it certainly could be, so we'll keep an eye on that, and then we'll see what is going. Apple's at 221, so we were looking around 222, 223. So keep an eye on that. We'll double check that for tomorrow, just to see how it ends up. But that's what we would be looking at for today as far as a relationship. Folks, if you did nothing else for yourself today and you've never looked at the opening price, pay attention to that. That is really a simple thing to look at, but it really does work, and it will pique your enthusiasm. Just look at how the market opens, and then, a half hour after that price, if you're above the opening price, you have a positive bias for the day. If you're below the opening price, you have a negative bias for the day. Defy human nature. Go in and check it yourself. Do 50 charts and look at the 50 charts on a daily basis and see how many times it happens. And you're going to be really surprised that it does have a really good statistical validation for a bias, and that's what's really great. Now tomorrow, Marshall has told us that we have the High Holy Days, Yom Kippur, and that ends the cycle of Rosh Hashanah and Yom Kippur. You buy on Rosh Hashanah and sell on Yom Kippur. It would have worked this year, I believe. So we'll see if it's going to work, because we're up, and I don't see it turning down right now, but it's still early in the day, of course, and we could easily see it turn, but you just never know whether it's going to actually do that or not. Now, the price of crude oil, we're up to 70.36, folks. If this is really a top in the crude oil, we're not going to get much above 70.70, which is the 78% retracement on that move. So that's another one that we want to keep an eye on for statistical purposes. So we'll take a little break here, and then we'll wind up the show.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's take a look here at this. This is the Treasury notes. As you can see here, we haven't made a lower low than yesterday as of yet, and yet we are completing that big ABCD in the bonds, but we could go a lot lower. Anything below that 141 level, I would say that we're probably going to accelerate to the downside. Let's take a quick look here at the Russell. And you'll notice here the Russell hasn't even bounced at all. This has the most bearish of all the stock indices. As you can see here on Thursday, we made that 61% retracement. We had the big, that was Friday, I'm sorry. And yesterday we had the big move down where we almost matched the low of September the 12th. And so this is the weakest of all the indices. So if you had to pick one to sell, that would be the one that you'd want to be selling. Right now, we're trading right at the 61% retracement on the S&P at 2904, but it's still a little early in the day. The Dow is still up around the 78% level, around 261.75. So all of these are still in the zone here. Nothing's really changed from the situation that I see. It's potentially bearish, but these markets have a tendency to move very, very quickly when they do. So sort of pay a little bit of attention to that. That would be the ones that I would be watching. On the currency front, the euro is trading at around that 117.05. We're having a little bit of difficulty here getting above 117.20, which is an important number. And if we can get above that, then that will tell us it will start to move higher. The dollar starting to move lower. Whether that has anything to do with these tariffs or not, I don't know, because they're in these tight trading range and anything could happen. So pay attention to these currencies because that's where the money is moving and that's where you want to be watching it very, very closely. We've talked about some of these currencies because of the fact that they're in really critical levels, and especially with the British pound. Take a look at this one.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.